What's up, guys? In this video we're going to do a market update. It is 1:45 p.m. Wednesday, April 6th, and we're going to kind of bounce back and forth between today's price action and yesterday's video. So starting off with crypto total market cap, weekly chart, I'm going to go to the 5-day real quick, and we can see that yesterday we said we might pull back and like $2 trillion was that level to hold. So we want to hold 2.10 trillion to 2 trillion. Like that's the spot we want to hold to continue on this uptrend that we're in. And right now we're at like 1.98. So like basically 2 trillion, but yeah, that still remains that level to hold. If anything, we could come down to this middle line of the void lines, which is at like 1.955. That's where we want to hold. We don't really want to come back down and retest these lows. If we do, it's not out of the ordinary. We just want to make sure that we hold it, and that's at 1.66 trillion. So that's our key level right here to hold if we break down below these points. And then for the altcoin market cap, we can go to the 5-day chart, and then let's see where we're at, because I think we're still holding that Fibonacci moving average that we said was the key area to hold for there. So on the 1-day chart, yeah, so we came back down and now we're testing it as support. So that's the level we want to hold, because you can see that the horizontal line here. I'm gonna put it across, and you can see we have, and I'm gonna hide these. You can see that we had the resistance back here, resistance here, support, breakthrough, rejected, and then now support, with the Fibonacci moving average acting as support, the 200-day moving average acting as support, and the EMA ribbon acting as support. So a lot of support where we're at right now to give us that push back up. So that is all normal there, and that was as expected, as a level that we mentioned yesterday that we need to hold. So we need to keep watching that. Total market cap, we want to keep watching the level there as an area to hold, because we broke past this point. We've been trying to break out since February. Rejected, came up to it, toyed around with it, broke above, support again. We have the 200-day moving average acting as support, the EMA ribbon acting as support, and the median line of the void line. So not out of the ordinary here. So that's all good. Now we're going to go to the Bitcoin dominance on the 3-day chart, and we can see we've kind of had a pop up here. So we've had a good strong like relief reaction here, but we still have this level, this key level of which was support. You can see how it was supported back here, but now it will act as resistance. So when we broke through this level before, we tried to come up to this point and got rejected. And usually when you break above it, yeah, we're going back into an uptrend. But I think we're going to get rejected by that level. We're seeing the EMA ribbon tried to cross from red to green, couldn't, rejected back down. We got supported by the lower band here and this prior support. And now we're just kind of having relief bounce with this dump off today, where likely if we come up to this level, we'll get rejected. And then we'll retest this again, and we know the whole story with that. We break down below. We got this area to target around 40%, and then this downwards support line as the last stand before dumping off and altcoins going crazy. Then we got others dominance, and I'm going to go to the 5-day chart. And we're still maintaining the support, because we had that level as a rejection point got above, support again, and we're kind of just wrestling between the median line of the void lines and the EMA ribbon and this level right here. So we got the buy signal. I'd only be a little nervous if we broke down below the EMA ribbon and went down this way, because it's likely we would target 12% right here, and that's a big drop as far as the altcoins go. We want to see the MACD TSI cross. This is the 5-day chart. You want to watch it. Now let's go to the Bitcoin chart, and we're talking about a potential scenario of us pulling down to like $44,000. So maybe we do have like a wick down to like 44,000, retest like this zone a little bit, but then it will be bought up very quick, and then that will give us enough juice to get like a reaction like that. So having it come down and then having it be bought up fast, which will give us that juice to maintain higher in the trend, kind of have like a bounce like this. So came down to touch the 200 moving average on the 12-hour chart, and we went down to that $44,000 level that we talked about. So it's likely maybe by the end of the day we pop back up to 46,000, and then we had this trend line coming down like that, trend line coming down like this, so the support and then the resistance, and then we get up to here, and then we can start to break out, right? So that's what we want to watch now going forward, now that we got that kind of dip down. And it's at a perfect level because you can see how the 200 moving average has been an important point of support and resistance throughout this whole time. So let me delete this, and I'm going to hide these so we can look at it real quick. Oh. So we can see here that when we came down to it the first time, we got supported, and then we came down to it again, broke through it, rejected, went into our downtrend until we came up to it again, got above it, supported, broke below it, rejected, got above, and then we went to it again, supported at first, then we broke below it, rejected, and then we finally broke above, and now we're holding it as support. Kind of similar to this time right here, where we just got rejected, broke above first time, got above the 200 moving average on the 12-hour, flipped the EMA ribbon from red to green, held it, and then we continued in our uptrend. And we had mentioned this area as being like the point that where we're at, and now it's shaping up to be like that even more, because when we did break above it before, we had to come back down, hold this as support, and then we could go again. We had 12-hour warnings and the sell now back then too, just like we did over here. And yeah, we're at that point where we're holding. So it's as expected, and these are the buy the dip type of moments. If we were to break down below here, that's when you know, like, all right, maybe we should exit this position. But yeah, so that's looking good. Ethereum, we had mentioned not breaking like $3,300 to $3,000. Mainly 3,000 is like the key level, but 3,300's a key one as well too. Yeah, so we're holding this as good support right now. So we don't want to break down below here, and we definitely don't want to break down below the $3,000 price point, because if we do that, we're now going back below the 200-day moving average, and the EMA ribbon will flip back to red, and that's not something that we saw the past kind of times we corrected. So we're sitting at like $3,200 right now, but we're still maintaining because we're watching that level here, 3,000. Because we broke below that, we're going back below the EMA ribbon, and it hasn't happened in any kind of tides turning type of scenario like we're seeing over here. So same kind of thing on the daily chart. We have the 200-day moving average acting as support. We wick down to it, and we're getting bought up from that point. And you can see that in the past. Oh. You can see that in the past over here, we've touched it as support, or it's been a major resistance in the past. So resistance, support, and then we didn't even touch it all the way up here. Support, then support, and then broke below, resistance, and now support again. So that's looking good. And then, yeah, and we're still watching those same levels, $3,000. Right now, nothing out of the ordinary. Then we have XRP. We can go to the 12-hour chart, and we can see that we broke down below that trend line. We can see the same similar structures, and we can see that, you know, we're holding support at a key level, and we just don't want to break down below. So we want to hold 77 cents to 82 cents where we're at right now, and we don't want to break down past this trend line right here. So we want to hold that, and then we want to break above this resistance here around 91 cents, and then this closes around April 22nd, this pattern. So all eyes on like 63, 65 cents, and then all eyes on 76 cents, and then all eyes on breaking through 94, 95 cents, $1, and then we'll know our direction. So as soon as we broke down below that trend line, that was kind of like a warning sign, like, hey, we may have a sell-off, but doesn't change kind of like where we're at in the trend. We're still in an uptrend. We still have the higher highs, higher lows. We came down to a point of support that we talked about in the last video, that 76 cent level as being that major support level. And then we talked about this being like our resistance up here around like 86, something like that. And I'll play the last video so we can cross check it. But yeah, so as soon as we broke that trend line, we dumped down hard, and it was like 10-15%, but it was expected because this whole time for the past 4 months we were holding this trend line, broke down below it, bam, right, a dump off, and then but we got supported by the horizontal support. So this is all good. And then we had this downwards kind of resistance over here, and if we can close back above like 80 cents, 82 cents today, that'd be nice, because that would just show that we already broken out of this downwards resistance all the way back from April of last year, and we're just touching it as support, right? So we need to keep an eye on that. But as far as the price action today, it's nothing to get freaked out about, because we're expecting this. We talked about this in the video yesterday. And then we got XLM, held that key level that we talked about yesterday, 20 cents, right? But yeah, so we want to get above 25 cents, and we don't want to break below 20 cents for sure, because then we'd flip that EMA ribbon back to red again. So that's where we want to hold. And then let me delete this so it's cleaner. This is where we want to hold, 21 cents, 20 cents, and we want to break through 25 cents, 20 to 21 cents. So we came down to like 20.5 cents today. And and we're already starting to bounce from that point. We want to get definitely back above maybe like 22 cents, so we can close this candle above the EMA ribbon and the median line of the void lines. But we said 20 cents, that key level, not to break, and we're still above it. So we know we're expecting at least like a minor correction before going back up again. Maybe this is going to provide us with enough kind of slingshot action to get above the blue Fibonacci moving average and the 200-day moving average. Be like that, and then back down to support, and then we move up fast like that. So we need to keep eyes on it. And then for H bar, we talked about like 20 cents being that key level as well, 21 cents to hold. And our levels to get supported by are 23 cents to 21 cents. So you want to watch that. And just with this dump off today, we held it. We're holding it so far. So it's just kind of like scare everybody out. You know, people buying in up here saying like, oh, now's the time it's going to go. And then it pulls back one more time to get supported. People are giving up because they, been trying to buy every single time up here. But this isn't the time to give up, because this is just one more retest of support to then have that slingshot. So we got here, back down, and then this is what's going to get us up to these levels, the 30-cent levels like we talked about. So nothing out of the ordinary. It's not a panicking moment. If we break those key levels that we've talked about, then we can revisit that. But as far as I'm concerned, this is a buy the dip opportunity. So that's it for the market update. I'll do a newsletter, and then there's a group session tonight at 6 p.m. So I'll see you guys there.